Dividend investing has been gaining a lot of attention lately simply because you can practically generate passive income while you sleep. Want to generate passive income while you sleep? Then it's a must to learn everything about dividend investing. Let's review what is a dividend. Dividend is a payment made by a company to its shareholders from its profits. Dividends are commonly paid to investors in either cash or stocks. Investing in dividend-paying stocks is a passive way to boost your yearly earning without having to work overtime or doing a side hustle. Most investors are familiar with dividend aristocrats, but do you know that there is an even more elite group of dividend stocks that are known as the Dividend Kings? In this video today, we are going to look at what are Dividend Kings. What are the differences between dividend aristocrats and dividend kings? Are dividend kings good investment? How to invest in dividend kings? Let's keep going. What are dividend kings? To become a dividend king, a company must have increased its dividend for at least 50 years consecutively. There are some facts that you should know regarding dividend kings. Number 1, there are 38 companies on the Dividend Kings list. Number 2, it's an impressive achievement to be able to increase dividends for over 50 years in a row, since crashes or steep corrections are a normal occurrence for the stock market. Number 3, these companies showcase the stability of the underlying businesses that generated the earnings growth able to sustain dividend growth for over 50 years. Number 4, past performance is not an indicator of future results. You have to do your own due diligence to figure out whether these companies have what it takes to go for another 50 years. Just because a company has increased its dividend for 50 years does not mean it will continue forever, because our world keeps evolving and changing. Companies can keep up with the ever-changing world. They too will get left behind. If you have enjoyed this video so far, please share, like, and subscribe to my channel. Let's keep going. What are the differences between dividend aristocrats and dividend kings? There are two critical differences between the two. Fact number 1, to be a dividend aristocrat, a company must be the S&P 500 member. That's not the case for dividend kings. Dividend kings must have increased their dividends for at least 50 years in a row, while dividend aristocrats only need to increase their dividends for 25 years consecutively. Are dividend kings good investment? Dividend kings are companies that survive through financial storms and difficult markets while still finding a way to increase their dividends each year. The fact is, a dividend king have been through a lot. Over the past 50 years, many calamities have happened. Here is a brief calamities that have happened in the past 50 years, like 7 recessions since 1967, and then we got the Vietnam War, oil crisis in the 70s, stagflation in the 70s also, double-digit interest rate, and then we also have 9/11 in 2001, dot-com bubble burst in 2000, and then our housing market burst in 2007 and to 2008, and our COVID crisis now. Through all the ups and downs of the economy, dividend kings can still increase their dividends and show that they indeed belong to the elite group. There are some facts you should know before investing in dividend kings. Fact number 1. The dividend kings have performed better than the S&P 500 index with lower volatility over the past 20 years, starting in 1999 through the end of 2019. Number 2, the 2021 dividend kings have fewer years with negative returns. Number 3, the dividend kings had only 2 down years during this period, while S&P 500 have 4 down years. Number 4, the worst year for the dividend kings was only negative 17.62%, while the worst year for the S&P 500 was about negative 36.81%, or more than double that of the dividend kings. Number 5, the dividend kings outperformed the S&P 500 in 12 out of the 20 years. How to invest in dividend kings? First, Google your Dividend Kings list 2021 and start your stock research from the list. Please keep these facts in mind. Just because the stock made it to the list is not an automatic buy. Second, however, the list is a good place to start your investment research though. Third, you need to look for whether the company still have the competitive edge for another 50 years. Fourth, make sure that the stock price is not overvalued. The price per earning ratio, also known as PE ratio, is a good place to start your evaluation. Fifth, you also need to make sure that the company can sustain the dividend payout long-term without impacting its growth. What if I'm not comfortable picking individual stocks for investment? Exchange-traded funds could be your investment vehicles then. Please keep some facts in mind before getting into any investment. Fact number one, there aren't any exchange-traded funds that focus exclusively on Dividend King. Fact number two, however, the ProShare S&P 500 Dividend Aristocrats ETF, also known as NOBL, that's the symbol, own shares of all the Dividend Aristocrats. Number three, since some Dividend Kings are also Dividend Aristocrats, investing in this ETF would allow you to buy most of the Dividend Kings. Number four, as always, do your own due diligence. This is not a recommendation for you to buy the ETF shares. What are people saying about Dividend Kings? They are reliable. These companies provide dividend investors a reliable source of income. They are the industry leaders. These companies tend to be the leaders in their own industries with reliable cash flow and a track record of impressive annual returns. They are less volatile. These companies are less volatile than the broader market. Where to find the updated list of Dividend Kings? You can Google Dividend Kings 2021 or whatever year you are in to get the most updated list for your reference. Here is a list of Dividend Kings as of 2021. Let's see, can you find any familiar names on the list? I can see Dover, Emerson, Hormel Foods, Johnson & Johnson, Coca-Cola, Lowe's, 3M. Please keep some facts in mind. There are currently about 28 companies on the list, and the number of the companies on the list probably fluctuates. Second, stock market fluctuates, but quality stays. These companies have demonstrated a history of weathering market turbulence. I hope you have enjoyed this video and find it valuable. Please support my channel. Please share, like, and subscribe to my channel. If you have any comments or feedback, please leave it in the comments below. Until then, we will see you next time. Thank you so much for watching. Bye.